Hey everyone, want to give you the heads up that The Chart Guys has a new service coming out. The Chart Guys have always had goal number one of teaching people technical analysis, but we realized through feedback that takes a whole bunch of time and some people just don't have that time with their lifestyle. So we're going to be releasing a swing report that goes out on a weekly basis, and it'll be both in written and video format. And we are currently rolling that out with our members at the moment. So keep an eye out for our social media, and certainly in front of these videos I'll let you know when that swing report goes live. Essentially, the goal of the swing report is to save you time, put in a couple dozen hours every week, get this report out, and ideally help you profit. So I appreciate your support, and I will let you know when it is live for the public. Broader market, so just a heads up, we've got quadruple witching day tomorrow. What that means is a whole bunch of futures and options contracts are all expiring tomorrow. A lot of people like to say, is it a bearish thing? Is it a bullish thing? Are we going to see huge volatility? In general, it would be too easy if we could say, oh, it's going to be a bearish day because it's a quad witching day. The market isn't that consistent. We can't really look back at historically what happens on these days and gain any notable edge. What we do know is that the first 5-minute candle of the day, we're going to see huge volume. So we can't necessarily look at volume tomorrow morning and compare it to previous days because it's going to be very skewed with the first candle. We can also say that the S&P 500, we're going to see a lot of dividend distribution. So SPY is going to have a dividend distribution. And if SPY were to open break even with where we closed today, it's going to be lower. And every single day when we have the distribution, every single time, I'll wake up and I'll remind myself the night before, don't get fooled. We have the distribution. There's going to be an artificial drop in price in SPY and other instruments. And I'll still wake up and look at the screen and go, oh, we're down big. No. So we have to keep that in mind. What it also does is it creates an artificial change in price. So the S&P 500 futures chart, I've already been talking about recently how it's had more value to me over the last few months. And tomorrow it's going to have even more value to me because the S&P 500 futures chart as well as SPX are not going to adjust for the dividend, whereas SPY will. And again, it's going to throw off the charts for SPY. I can still use the 5-minute chart for SPY for intraday action, but as far as using an hourly time frame and looking at today's price action in reference to tomorrow, it's not going to work. We can't use it like that. So just be aware that that is occurring tomorrow. So looking at SPY, we broke the low of yesterday, inside bar bear break, and as you can see, no bear follow through. So what we have and what I'm watching is our high of the bounce, low of the pullback, lower high as anticipated, but certainly very little follow through for the bears. The bears have had 2 chances for follow through. The first was last night when the S&P 500 futures chart tested the low down here. That low was 3074.80 and we hit 3076.40 and bounced. That was a nice bounce for the bulls to give them some conviction, pretty much a double low of support. As long as this line in the sand level holds, this is now a short-term line in the sand level. We have our longer-term line in the sand level down here. As long as this level holds, very clear if-then statement. If this level is support, then the bulls are in complete control. We have a tightening 4-hour range, so high, lower high this morning, held support, and now sideways a bit. So that was number 1 hold of support from the bulls. The second time the bulls proved themselves was today on SPY. High of the day, hourly high or low, lower high. We had a nice 15-minute range to be watching. Bear break into the close. So here's the 15-minute chart. High of the day, 15-minute high or low. Nice top fish, rejected from resistance by 31 cents. Nice bottom fish, bounced off support by 22 cents. Failed to break resistance. There's your bear break. There's a slight uptick in volume. If the bears are going to follow through, there it is. The setup is there. They have it. They've got momentum. They just need to follow through and break the low of the day into the close. End of the day, bulls said, shut up, bears. Here we go. We're just fine. And we did end with resistance. You know, we didn't break clear 312 and 312.30 resistance, but we didn't see any bear follow through. They had a clear bear break and an uptick in momentum, and they could not follow through into the close. So the bottom line is the burden of proof still remains on the bears. Could this be a little bull flag, a little healthy higher low into continuation? I don't necessarily like to call it a bull flag. You know, if I were zooming in into only the last 5 days, then I could call it a bull flag. But essentially what I'm viewing it as is a tightening daily range with very little bear follow through. And I'm going to have to see a break of the low of today, tomorrow, for the bears to prove anything to us, keeping in mind that that break has to happen on SPX, not SPY, because it will be artificially changed price due to the dividend. IWM. So it as well. What the bulls want to see is a regained hourly uptrend in their favor. Again, whenever we're looking for a daily high or low to form, so high, low, lower high, scouting a higher low compared to 133.28, we do want to see the hourly trend change back to the bulls. So what that would have looked like today is the bounce in the morning, higher low, and then a higher high at the end of the day. And we're not seeing that because XLF is still seeing a little bit of weakness, IWM seeing a bit of weakness with it. So even in SPY, bulls do need to regain that hourly trend change in their favor, but bears need more follow through to prove anything to us. 307.67, 308.80, those are the two corresponding levels to the S&P 500 futures double bottom on the 4-hour time frame I just showed us, and that's our short-term line in the sand level. So we can say if 307.67 support is holding, then the S&P 500 bulls are just fine. QQQ, very strong. We did break the low of yesterday on QQQ with no bear follow through, closing near the high of the day, and we are looking at two little resistance levels, 245.50 and then the all-time high 247.82. XLF looking for a daily high or low. Again, we need a little bit more follow through to say that our daily high or lows have been set. So green day tomorrow for the bulls would probably do it, but XLF very similar to a lot of our laggard sectors. Look at Jets. Jets is looking for that higher low. Look at the cruises holding the line in the sand support even with the bad news, trying to get that bounce. BA trying to form that higher low. So overall, XLF and our laggard sectors looking for daily higher lows. For the bulls to regain complete control in this market, we need to confirm higher low and higher high back in favor of the bulls. And of course, we know the bears' burden of proof is on confirming a daily downtrend, and a lot more bear follow through will be needed for that. XLV, high, low, lower high, scouting a higher low, hourly trend change back to the bulls required for that higher low to be set. And if we would break the high of today, tomorrow, that would be an hourly trend change back to the bulls, and we'd be looking back up at the top of this bounce, 191 cents. Biotech bulls got a break today. Daily resistance was 106.08. We topped out yesterday, 10 cents below that level, and broke it today, and we also broke 106.11 behind it. So the only XBI resistance is 108.05, the top of the COVID bounce, and that top of the COVID bounce is higher than where we were pre-COVID. So overall, biotech sector weekly time frame, that sure looks like a bull flag. And we just need another 2% to get confirmation of it. So the biotech sector bulls showing up a little bit more than our other sectors here just in the last couple days. SMH is extremely tight. When I see two daily candlesticks that look like this, that tells me, hey, you want some volatility? Watch this sector tomorrow, because the odds that we see a tighter day than we saw in the last 2 days tomorrow, very, very low. We can anticipate that we're going to see a break of tightening ranges. And if we're looking at it, let's take off extended hours. And I don't like this view, so I take that back. Basically, we're just watching to see, do we get a bear break of 150.72, which would tell us daily consolidation is underway, or can the bulls break 152.35 to fend off daily consolidation? Every other sector that we just looked at set the daily lower high and is consolidating and looking for a higher low. SMH has not done that yet by holding the low of yesterday. That was fending off daily consolidation. So that's the look at our sectors. Again, bulls are just fine. That's what it boils down to. And I'm sitting here with a bearish lean the last couple of days looking for the daily lower high to be set. And we did see some pullback from that lower high being set. But if that's it, if that is as much pullback as we see, the overall market bulls will keep their control. The VIX, could this be a daily bear flag? Absolutely. So we had a bull break today, and obviously we closed weak. So now what we need to see, if I am a bear, if I'm bearish the volatility index, I want to see a break of 32.20 and 3170 to confirm this daily bear flag, and that would be our low of the dump, high of the big bull move, higher low, lower high, lower low. We would confirm a daily downtrend if 3170 breaks from here. Weak bounce, no follow through, which is the opposite of weak pullback, no bear follow through for all of our sectors at this point. And what's missing on this pullback is bear volume and all of our sectors hitting the low of the day at the same time. We got that on our initial drop last week. We are not getting that on this drop this week. Gold. Let's look at the dollar first. Has the dollar changed its daily trend? I don't know. I haven't looked today. It has. So bull break over 97.45. That's a little higher low and higher high, which is notable. Now we zoom out to the weekly, and we're certainly looking for a weekly lower high compared to 156. And we will need a weekly trend change to be confident that our monthly higher low is set compared to the COVID dump low. So gold tried to head up to resistance today, but failed to do anything. And again, my take on gold right now is just I'm not missing anything by not having a position. It's pretty stagnant. Not much is going on. And I know if we're going to open this range up again for the bulls, we have to break the double top at 1745. So I can say to myself, I have no interest in being in a bullish position unless 1745 breaks. And what I would miss on that, just looking at GLD, GLD is at 162.24. And if I'm going to wait for that bull break of that daily level to take place, from where we stand right now, I would miss 1.2% to the upside. So that is enough for me to be patient. I don't care about 1.2%. I would rather keep that cash and use it for other trades. And if the bulls prove to me, okay, we're done consolidating, we're ready to show back up again, then I'll put that money to work in the precious metals. But until that happens, just patiently watching. And again, this weekly time frame, the consolidation, there's no red flags. It's just bulls biding their time. Hopefully, that's what the bulls are hoping for. Silver, could this be our daily lower high? We were looking for a lower high compared to 18.19. Entirely possible. And we would need to see the bulls hold 16.95 on any pullback. So again, nothing really going on in the minors that has me itching for a bullish position. I certainly don't want a bearish position. Someone asked me about a bearish position in the chat room, I think today. And my answer was, I just don't see a setup that I like. I just don't like either direction right now. Just being patient, waiting for clarity. And there's nothing wrong with that. Last thing I want to be doing is forcing trades on something that is not entirely clear. If you forced me to pick a direction, it would be bullish because of the weekly consolidation, but fortunately, no one's forcing me to do anything with trading. GDX. So bears are still in control of GDX. We're watching the pattern of a lower high every day, pretty much, except for 2 pennies here, but a lower high every day the last 5 days. 31.22 is a key support level, and if 31.22 comes back into play here, this hourly RSI will be back to oversold again. So there will be a potential play off of that support level, but again, we're looking for a weekly higher low, and the bulls have not been able to convincingly give us a daily shift in momentum to have us confident in that weekly higher low. Oil today, bull break, and we got over 38.73, the high of yesterday. So now we're just looking at 39.04 and 40.42. We're not seeing any notable weakness in the broader market, and we're not seeing any notable weakness in oil. And natural gas, could this be a daily bear flag? Absolutely. The burden of proof is on the bulls to prove to us this is not a bear flag, and to do so, I need to see a move up over, 163 really. But even then, anything under 173 is just a daily lower high. If I wanted to be an aggressive bear, I'd be looking for an entry on a daily lower high. But otherwise, again, the guide is the weekly 12-period exponential resistance, currently working on our potential 11th rejection in a row, and that is our short-term guide. So there are plenty of plays out there that are still just in bullish daily uptrends. And as long as we don't see big bear volume and our major 3 sectors dropping to the low of the day at the same time, we're going to be looking for bulls to maintain control. Today was the day for me. I'll always obviously be paying attention tomorrow as well, but today is the day that the bears could have made a statement. Daily inside bar bear break, hourly downtrend confirmed, and again, just the inability at the end of the day to see any follow through tells us bulls are still fine. They're confident, And they're holding on to this setup very well at this point. So I hope you're well. I hope you have a good Friday. Don't get fooled by the lower open on SPY, and don't get fooled by the first 5-minute candle having huge volume on pretty much every individual name that you're going to be looking at. Do good things. We'll see you next week.